Hey, Wyatt Jozbowski here, and in this video, I'm gonna break down why I bought a duplex for $435,000. Now, the story goes back a few years to when I was 21 years old, and I really came across the idea of investing in real estate and all the benefits that came with it. To me, it seemed like the absolute best way for someone to invest their money and grow their wealth over time in multiple ways, right? Through debt repayment, tax advantages, just building equity through appreciation, cash flow, all the benefits that come with real estate. It seemed like a no-brainer to me. But at the time, I wanted to get into slightly bigger apartment complexes. That to me seemed kind of the least amount of risk, and also being able to cash flow a decent amount. It just seemed like a good opportunity, but it would also be a lot more challenging to get one of those properties. So I was kind of just in this mode of saving and being patient until I could do something like that. Until about a year ago, when I came across the concept of house hacking, thanks to a few YouTubers, which is the idea of buying a 2 to 4 unit property, living in one of the units, and then renting out the other units. And that essentially takes your mortgage down to practically nothing, or even nothing in some cases, if it's a triplex or a fourplex, or certain areas, for example. And that was the idea, right? So that you would get easier financing because you're actually gonna be a primary resident there. And there are just more options, right? There are more duplexes, more triplexes than there are 16 unit apartment complexes, at least in Tampa, right? So that was the idea, and I started my hunt for a 2 to 4 unit property between $300,000 and $500,000. That was the price range. Now, I looked for about 5 to 6 months on and off, and throughout that time, I would look at different properties. I would go as soon as they became available or they were listed. And usually there was something or another that I didn't really like about the property or the area, until I finally came across a duplex in one of the best areas of Tampa, or at least what I think is one of the best areas of South Tampa. And I pretty much just jumped on it instantly. So this is the property. As you can see, it has very, very good curb appeal. It kind of looks like a single family house. It's just one story. And I really liked that. I really liked the neighborhood. Really amazing houses kind of nearby throughout this neighborhood, and a pretty high median price. And I only think it's gonna go up in this area. So as soon as that came available, and this was an area in a place that I would actually want to live myself, and that was a big part of it, right? Because I was actually going to be living there, as I am right now. So as soon as I came across that, I put in an offer at $435,000, and it was accepted that night. So I was officially kind of in contract for that duplex. And from there, we went through the kind of standard process of inspection and going through all that stuff. That was my first time through it, so definitely a little bit of a learning curve there. But I knew I was also going to be putting in some renovation work, as the property was slightly outdated on the inside. There were some things definitely holding it back, let's just say that. So I wanted to kind of bring up the value, and I thought this would be a good opportunity, a good property to be able to do that. Now, there were a couple things that I didn't love about the property. For example, the neighborhood kind of backs up to an expressway and a railroad. It's not too bad. I've been living here for a month now. You hardly notice it at all. But that was something that really worried me. And the only thing that really kind of helped me get around that was the fact that there were other $600,000, $700,000, $800,000 houses also in that same street, also backed up to that. So I just figured, if the values of those homes can continue to go up and people are buying those, then it wouldn't be that big of an issue, and it definitely wouldn't be an issue just to rent them out, which was my plan. So with that being said, though, I was a little concerned about it, and I actually renegotiated my offer a little bit towards the end, right? I think 5 or 6 days before I was supposed to close on the property. And I ended up getting $5,000 in credit from the seller and $2,500 in credit from my realtor, which was basically a free $7,500 that I was just going to put towards renovation. So that worked out kind of well and helped me just continue pressing forward and not back out of the deal, essentially. So I ended up closing, and this was the breakdown of my numbers. All right, so in total, again, the offer was $435,000. Keep in mind, I was gonna be getting those $7,500 worth of credits. Also subtracted from that, there were some closing costs, and I got some credits from my lender as well. So in total, I didn't have a ton of fees, and I ended up putting 15% down on the property. The total amount that I had to put down, or send rather, to actually close on the deal was $61,193. Now, with that being said, the loan was $369,750, and my monthly payment on that, monthly mortgage including property taxes and insurance, is roughly $24.89. So that's how much I pay every month. Now, included in that is about $55 of PMI as well, just because I did put less than 20% down. That will drop off in about 2 years once I have roughly about 20% equity in the property. Since I put in some renovation work, it's probably already above that point. I could do it now, but there's just no hurry for me, and I don't really want to do a refinance right now, so I'll most likely just wait for those 2 years and then have them reassess the value of the property and drop off that PMI. Now, I already rented out the other unit, and I did that for $1,549 a month. So that tenant is actually moving in a few days, and that process went super smooth. It was super easy following the renovation. So if you look at that, my monthly payment is $24.89, and my rent received is $1,549. Now, after principal payment and all the tax advantages that I'll be getting, as well as appreciation, and the fact that my girlfriend is also paying part of the rent as well, I'm pretty much living here for free, and it's a great way to build wealth through, like I said, debt repayment and appreciation. So it works out pretty well with the numbers, even with the PMI and only putting down 15%. Now, included in that out-of-pocket cost is also the renovation cost. So again, I put down about $61,000, but I also put in about $38,000 worth of renovation work. Now that equals out to be roughly, it was I think around 18 or so thousand, 18, 19,000 per unit, give or take. One side was more expensive than the other. But we did a good bit of work. I'll show you some of the before pictures right now. As you can see, the kind of kitchen area was very dark. There was only one light, and the counter was just kind of like a laminate counter that was kind of ripping and falling apart a little bit. The cabinets were quite the disaster. They were disgusting looking, honestly, and the floors in the bedrooms weren't great. A lot of the door handles and small stuff like that was just outdated, in the fans in the property. But overall, it was just cosmetic work, so I wasn't gonna have to do anything big. The only other thing that I did was install brand new tankless water heaters just to save some space in the closets and get rid of those older water heaters that were in there before. Now, here's how it looks afterwards. You can see the kitchen is completely looking brand new. I had can lights installed all throughout the hallway in the kitchen and living area, which really brightened up the place a lot. Granite installed in the kitchen, brand new appliances, cabinets were painted with a fresh coat. They look practically brand new, although they're not. And in the bedrooms, did some flooring as well, some luxury vinyl plank in there, had the unit painted on one side, not the side that we're living on, but on the side that I rented out. And then some other improvements as well, giving kind of a fully updated look, and I'm really happy with the results overall. Now, one of the things I loved about this property was that it had private backyards on both sides of the duplex, which I figured would be great for any kind of tenant with dogs or any pets that they wanted to just keep within that backyard. That was definitely going to be a big selling point and one of the reasons I really loved the property. But overall, renting it out was extremely easy. I had it listed for a few days. I started out at $1,600 and I was already getting some leads and showing the property, but I got a little anxious just because after showing it a few times, nobody applied. So I dropped it down to $1,549, although I know I could have rented it out for $1,600. I just wanted to get someone in there. And then I ended up getting 3 applications literally the same day. So rented it out, got it signed, and that tenant, like I said, is moving in just a few days. So that's kind of how it all works out, and that's the process that I went through of buying this duplex. My plan is to hopefully be able to get another one, whether it's a year from now or 2 years from now, or maybe even 3. We'll see how it goes. But kind of build up the portfolio that way through living at these properties, getting good financing, and renovating them a bit if it needs the work, and then going ahead and moving to the next one and just keeping those units rented out and building my equity over time. Now, if you have any questions, just let me know in the comments below. But if you like this video, give it a like, and I will see you guys next time.